Hi, this is LaFay Smith from Business Advisor and Counselor, Inc. I wanted to personally introduce to you a new service that we're offering here at BAACI. The service is called Quantitative Analysis for Businesses. And as you well know, that businesses often are faced with challenging decisions that could make, save, or cost their company money. And one of the reasons and things that make these decisions so challenging is taking into consideration all of the different variables that can have an impact on your decision and the overall outcome. And not all businesses have the resources to look into and play around with all the different scenarios and variables that render them the best decision. So I thought that because what Business Advisor and Counselor Inc. does is provide services to small and medium-sized businesses, all businesses that are interested in our service, but especially in particular small and medium-sized businesses. Because we provide services to you, I've decided to develop a intelligent spreadsheet, so to speak, a model, customized. We can customize an intelligent spreadsheet for your business based on your particular scenario. And we are doing this free of cost for you to analyze and review and to see if this model would be something of value to you and could save you money. That's what's going to determine if it's going to be of any value to you, is if it provides you insight to either make you money or save you money by letting you make an educated decision. So let's just talk about some of the different scenarios something like this quantitative analysis for business model could be used for. Let's say that you were in the process of buying or considering whether or not to buy or lease an office space. Of course, you have to run numbers. That's what quantitative analysis is making decisions based on data or facts that are measurable. So you're going to, of course, do your analysis. You're going to do some numbers. But the question is, do you take under considerations all the variables and all the scenarios with those variables? Changing a variable here, changing one here, changing all of them, changing none of them, looking for best case results, worst case, etc. And some of the things that would come into play with this particular example, that is, if you were to buy or lease or considering buying or leasing office space, you want to think about the down payment versus a deposit. Of course, if you're going to purchase, you're going to need a down payment, unless you're going to pay outright. Usually people put down a down payment, and that's probably going to be significantly more than a deposit. So you need to think about that out-of-pocket costs. You want to think about depreciation, if you're buying equipment, that is. And you want to think about tax write-off expenses and compare these things if you're leasing, or the difference in costs with the types of insurance you might have to get if you purchase versus lease. You want to think about the potential appreciation of the property. You want to take that into consideration. Or, in today's world, 2010, a decrease in the equity of the property. You want to think about annual rent increases if you are leasing. You want to think about property taxes if you're purchasing. You want to think about generating some sublease income if you're allowed to sublease part of the office space. So you see that there's a lot of things you want to look at, a lot of different perspectives that you want to consider. And if you had a model that allow you to look at these things, you can make your decision pretty confidently based on facts, quantitative, factual data. That's one example. Here, let's take another one. Let's say that you have a contract, and it's a good contract, but you have another sizable contract pending, and these two contracts will overlap. If you take the smaller contract, it's going to overlap with the larger contract that's pending. So you have a decision to make. You're considering subleasing the smaller contract, but you need to, of course, analyze that. You need to first figure out, if you do sublease it, will you make a net profit? Is it even worth you doing? And then, so you need to consider all the costs involved with determining whether or not you're going to make a net profit. And those are a lot of different variables that come into play there. But you also want to consider, on the no sub versus sub comparison, your opportunity cost, and that is, how much are you going to lose if you decide to go with this smaller contract versus waiting and going with a larger contract. And then, so ultimately what you want to find out is, and what you hope for, is that if you decide after doing the analysis that you can sublease the smaller contract and still make a net profit, a decent net profit, right? And that net, you come out on top. You service two customers and you make profit on both. So these are just some examples to try and trigger your mind to think about ways that you may be able to use a service like this in your business. Because what I would like for you to do, once you figure out that this is something that you might can use, what I would like for you to do is send me your scenario. Send me your spreadsheet with your variables and what you want to review and what you need to know to make an educated decision. And what we'll do here at BAACI, we'll do the analysis, we'll do the spreadsheet for you, and let you review it with some of the variables made available to you to test and review. And if you find that it's something valuable, then of course we would be happy to sell you the spreadsheet and partnering with you for any future decision and intelligent Excel business models you might need. All right, so that's quantitative analysis for businesses.
Please subscribe, comment, and rate this video. Click on the button at the top if you would like to learn more about quantitative analysis for businesses, and if you would like to download a spreadsheet/model to get a first-hand look at the intelligence within the sheet. Thanks again for watching. Bye for now.